2018 ended on a positive note, at least when it comes to jobs in the U.S. The jobs report released this morning revealed the U.S. added 312,000 jobs in December.
But the unemployment rate is at 3.9%. That's up since the fall, still down for the year, though. From now on, we're joined by economist Michael Szanto on all of this. All right, Michael, thanks for joining us. So why is it that the markets were down, but the number of jobs are going up? Where is that dichotomy coming from?
Well, I mean, as we could tell by yesterday, there's still a lot of concerns about a possible trade war or ongoing trade war with China, problems and concerns with Britain's Brexit, an incredible growing political crisis here in the United States, a deadlocked government, a government shutdown, a erratic, unpredictable president, for example. So those concerns have not gone away.
Can we talk a little bit about this increase in jobs? What's that we've seen this morning? What's behind this increase? What do you say?
Well, the United States has the strongest, most robust, versatile, resilient economy, and that's what's behind strong job creation. It's very positive news. It's something that we can be happy about. So that's a good thing, and definitely a good thing. But we also have to be cautious. This particular economic expansion has gone on for a very long time, and the U.S. economy, as well as the global economy, by nature is cyclical. So we're kind of starting to be due for a correction/recession, or basically the economy to turn at this point. So we have to be cautious.
Hey, Michael, you mentioned the president. He likes to talk a lot about the health of the stock market until it becomes unhealthy. Then we don't hear about that anymore. Yes. He is tweeting this morning about the new jobs report and how great it is. But what's the best indication of the health of the economy? Is it the stock market? Is it the jobs report? Like, what does this all really mean?
I mean, it's a mixed picture because there's a lot of things going on at once. We're very, very unlikely to have an economic expansion last forever. That was like the false premise in the 90s that we had conquered the economic cycle and it was a great moderation and we wouldn't have a recession again. And we did in 2002 and 2008. So he should be rushing to take credit because this could turn around on him very, very fast.
Well, he is rushing to take credit. I think it's very accurate statement. And in fact, the job reports was actually more than what was predicted. So that's part of why the market is reacting. However, the unemployment rate actually went up in December month to month. So what's behind that? Why jobs going up, but the unemployment rate is not keeping pace with that? What's the difference there?
Well, that has a lot to do with how many people are actually looking for jobs. And counterintuitively, that's not entirely a bad thing. Because if you have no slack in the labor market, that means that there's nobody available to be hired. And that's the point that you might see an economy overheating, you might see starting signs of inflation, or simply companies have increasing trouble finding the people that they need to assume the roles that they need, their jobs that they need. So it's not entirely bad. And also it reduces the likelihood that the Fed will continue to raise interest rates. So, it's not entirely a bad thing.
All right, Michael, thank you.
You're very welcome.